Without further ado, we will get started for our Funding Pathways event. Now, the purpose of this event is to dive into the many different routes that businesses can take to secure funding. And for you as the founders, this is mainly to help you understand and decide on which path suits you and your business best, hence funding pathways. So first off, I just wanted to have you give a brief introduction of yourselves, and the companies you're representing today. Let us know, one, what types of business funding you have experience with, and then two, what types of founders should be reaching out and connecting with you. So I'll kick it off to you first, Sam.
Hi, so I am Sam from Techstars. Techstars is an accelerator program. We've been around since 2006 and now run 50 plus programs throughout the US as well as internationally. I come from a background of SVB Capital, so a bit later stage, and then some earlier stage funds in New York. I am also very passionate about crowdfunding, alternative sources of funding, and government funding. I've worked in a dual use startup, which have a large stream of revenue from the government as well as commercial. But now I am at Techstars on the pipeline team, helping engage with founders to learn about Techstars and applying to Techstars. So anyone who's early stage and considering an accelerator should talk to me.
I can go next. Thanks, Sam, for kicking that off. I'm Sunwoo. I'm a current managing partner at Atland Ventures. And Atland Ventures is a venture capital that focuses on investing at the seed stage. And I know that can mean many different things to many different people. So I'll put it kind of into round size. So the rounds that we usually invest in are about like 1 million to 3 million. And we are industry agnostic. The most recent companies that we've invested in have been in the Web3 space, which is super exciting with that Gen Z perspective that we do have. So if you want to learn more about how we invest and where we kind of stand out in the market, definitely feel free to check out the breakout room and come talk to me after.
Hey everyone, my name is Faven. I am representing M13. I'm an investment analyst here at M13. We are an early stage venture firm currently deploying out of our third fund, which we announced earlier this year. It's a $400 million fund. We invest in essentially the future of commerce and the future of consumer behavior, whether that be commerce enablement, commerce infrastructure, future of digital health, future of work, future of money, essentially just the future of everything any consumer touches. And yeah, and we also started our Web3 initiative as well. And that sort of like undercuts every thesis area I mentioned prior. And we are investing from pre-seed to Series A stages. Our pre-seed investments, we don't typically lead. We just write standardized 250K checks, but we typically take the lead position for our Series A deals, investing anywhere between 5 million and 15 million. But I'd say like Series A is our sweet spot. And a little bit about myself. I recently joined M13 about 2 months ago. And before that, I worked at a startup called King's Crowd, where we focused on building like an in-house ratings algorithm for companies raising on the online private market, such as WeFunder, Seed Invest, Republic. Yeah, and before this, I started my VC journey with an internship at Atland Ventures and got my degree from Boston University in economics and mathematics.
Amazing. Thank you for those awesome intros. And I did want to mention to everyone real quick, feel free to write any questions, comments, resources, anything you want to share or ask in the Zoom chat, and I'll keep an eye on that. Thank you. So my first question for our speakers is, kicking it off, ground level, groundwork, where does a founder go to find funding when they're in the beginning development stage of starting their business? So they're just starting to gain traction, perhaps beta testing and getting some good customer feedback. And now they're realizing like, okay, I need to start fundraising. Where do they start? Where should they look? And what can they do? And speakers, feel free to just come off mute and jump in, take the floor whenever you're ready.
Sure, I'll kick us off with some options that come to mind. That first initial amount of funding to get started is probably the hardest because you can go all sorts of different ways. There are pre-accelerators and incubators that can give you a little bit of initial funding and obviously a lot of support as you're getting your product up. There are local grants that I would suggest looking into, especially if you're in a tech ecosystem that is trying to really heavily invest into tech, such as in the Midwest or certain other upcoming cities. There are local programs that really try to invest into startups with those small amounts of grants. And then finally, I'll just say accelerators are very often the first check-in. So even if you think you're early, don't underestimate just shooting your shot and going for an accelerator for a little bit more capital.
Yeah, and kind of adding on to that, as Sam kind of mentioned, accelerators, I want to dive kind of deeper and congratulate you all because you are already in the Grid 110 ecosystem, which is already amazing. So congratulations. You've kind of already found your first way into, funding and getting capital. And I would like to applaud you all for that. But there are also a lot of VCs that are earlier than pre-seed and they do invest in the idea stage. Techstars actually has a new fund. Sam, you can talk about this maybe even more, that kind of invests really, really early, even at the idea stage. So VCs, if that's a route that you want to take, definitely are existing in that early stage. And there are people that you can reach out to. I don't happen to be one, but Sam, I know you are looped in there. So yeah, definitely VC is a route you can take as well.
Yeah, I'll quickly interject, check out the Rising Stars Fund with Techstars. They have built this fund to really invest in people pre-product, pre-accelerator. And there's a few other funds that are really trying to get as early as that.
Yeah, both great options, Sam and Sunwoo. I would say, I guess my only additional suggestion would be to bootstrap as long as possible to maintain like the most ownership in your company. So yeah, grants, accelerators would be great funding options for that.
Yeah, thank you. Those are all great points. Really making use of local grants and those local opportunities, like you mentioned, Sam, that are a little more niche and maybe focused to your industry. And then also getting into accelerators and incubators. And Fevin, great point about when you're at the beginning, really trying to bootstrap for as long as you can before getting into VC, which we'll talk about in a few moments. But my next question is, how do you define traction? So this founder says, a challenge I have is investors all seem to define traction, a little bit differently, depending on the investor or the industry. So how can founders make sense of defining their traction and presenting it in a way to investors that can really leverage the position they're in and get them that funding?
Yeah, I can start with this one. So I guess I would say it really depends on the stage you're investing and also the sector you're investing in. So in earlier stage companies, such as like super early, like pre-seed stage companies, revenue isn't the most important because sometimes you're just at the idea stage, the pre-product stage. So we're really taking more of a founder bet and market potential bet. So we are more like reliant on investing in a phenomenal founder who has like super deep domain expertise. Obviously, a stellar team has to be a part of this journey. And I would like to emphasize this, a very, very clear plan for execution, at least 12 to 18 months out. This gives us more confidence as investors to believe in the company that you are trying to grow. So I would say that, yeah. And then at earlier stages, although revenue isn't as accessible, we would say that the traction would be more towards number of users or customer interest, amount of people maybe on your wait list, how the beta is going, because we do, as investors, when we do our due diligence, we do speak to the customers or brands that are onboarding on your beta. And yeah, so that's what I'd say.
I think Fevin outlined that really well. And just a couple of things to add. I know people in this room are probably different stages from pre-seed to seed. And one thing that I personally keep track of, if a company is too early and doesn't really fit for investment at the current time, and say a VC has told you that you're too early, you're like, what the heck does that mean? A really good way to keep in touch with the VC is to send regular updates. And this is something that I don't see founders really take advantage of. So even if I'm seeing a monthly update saying, here's some growth metrics, here's some of the KPIs that I've been I've been keeping track of, here's how my waitlist has grown. And then you can, after maybe like a couple months or two, and you feel like you're ready, either you or that investor can have that conversation again, and kind of now you have a benchmark of where you were previously and that you can compare to. And that is also a good way if you don't currently have like that triple, double metric that a lot of investors do look for in the beginning. So even just small things like that really do make an impact. And I think that really makes a founder stand out when I'm looking to do due diligence on a company for investment.
Yeah, I think they said it best. I would love to just emphasize investor updates are huge. If you get passed on for being too early, we regularly re-engage with people after getting an investor update. If you're interested in how it breaks down like traction versus growth, one essay that I reference a lot is Brian Balfour. He has an essay that breaks down traction, transition, and growth. So that's kind of one way that you can, I'll put the link in the chat. Think about the terms, but don't hold yourself too tightly to the terms. And I always say, tell me what traction matters to you, because a lot of people don't care about revenue early, and a startup definitely might choose not to focus on revenue. So tell me what you're really aiming for, and tell me why those are what matter to you, and I'll count that as what your traction is.
Awesome. Yeah. Thank you, all three of you. Thanks, Fevin, for, starting us off with kind of some of those important like metrics and KPIs to defining our traction. And then everyone jumping in about investor relationships and updates. Kind of like on that same vein, I wanted to ask I see some of those putting in the chat, more early stage founders. How would you recommend they go about just establishing those connections with investors, or even just starting to meet investors in networks that they might not be as tapped into already? How can they kind of like start those conversations and then go on to, of course, give the updates and maintain that relationship? But if they're not really, super well connected yet, are there any tips or advice for kind of networking and inserting themselves into the investor realm?
Yeah, I would say just like how investors do heavy due diligence before we invest, when we do a deep dive and kind of try to get a scope of the market and other competitors, we would heavily suggest that founders do the same for investors. I would say look at our past investments, research articles about the company, and see sort of our traction and our trends, just like how we see yours. And then from there, you have like a more targeted approach when you go to networking events, and you know exactly what to talk to founders, investors about. And it makes us more confident when you do that due diligence, because we will take you more serious as a founder, and it just gives us more reassurance. You wouldn't want to like go to an early stage consumer fund and then pitch like a biopharmaceutical company, you know? So yeah, I would probably say that. But yes, networking events, because a lot of the companies that we do look at typically come from warm intros from either other investors or portfolio companies, like founders from our portfolio companies. So yeah, definitely put yourself out there, I'd say.
Yeah, so bouncing off of that with doing your due diligence on investors, there's a couple of things that I really suggest that founders do. I always suggest that founders put together a dream investor list that has a column on what firm it is, who the target person would be, why you would really want to work with that person, and kind of an understanding of what their portfolio is. So some starting points would be to look at companies that you think are similar, that you think would have a synergy, that are not direct competitors, because then they won't invest in you, and use that research to make a target investor list, and turn every investor meeting you have, see if they can help you meet someone on that dream investor list so that you can keep that ball rolling, turn it into a flywheel.
Great, thank you. Yeah, thank you, Bevan, for pointing out that it's super important to be doing your due diligence, doing your research, coming into it already, you know, knowing your end goal with these investors, and making sure that you have the right like company investor lineup there. And then Sam, I love that point about creating kind of like your dream investor list, because that sounds like great for really guiding your research and looking about who to reach out to. And I see some action going on in the chat. So thank you everyone for, you know, replying and sharing resources. That's really great. So now for my next question, I wanted to get into, you know, we talked about early stages, bootstrapping for as long as you can. But now looking into like the 100K to like maybe 250K range, what are the best places for founders to look for funding support in that kind of mid-range there?
I don't know if we mentioned this previously, but I think we left out angels. So angel investors, they do exist. There are many of them, and you can find them locally. So I know Grid 110 is based in LA. If you guys are based in LA, there probably is an LA-based angel network that Grid 110 is looped into and has connections with. And I think a lot of it is, and maybe, you know, your neighbor's neighbor happens to be an angel investor. You really just kind of have to tap into your network and see. And, you know, that's something that happens kind of serendipitously. So you just have to continuously put yourself out there and say, hey, I'm trying to meet with angel investors. And then from angel investors, you know, they might be LPs in funds as well. So they could introduce you to different VC funds. But just really putting yourself out there does get you a lot of capital, more than you might think. Or just having those conversations started, as I mentioned earlier, to have something to benchmark yourself against with as you continue to grow, because I think that's one of the most important things for investors to see, because every company is different. And one company can't be based off of a certain metric, it can't be like cookie cutters, what I'm trying to get at. So I think just getting yourself and your company out there is really important. And yeah, tapping really into those angels at that early stage.
Yeah, it's a really good point. Yeah, and I would just like to remind everyone that $250K check for a pre-seed pipeline, that's like standardized. So if you believe that you are ready for venture scale and it does fit in the thesis that I mentioned prior, definitely reach out to me. But yes, that is typically, you wouldn't see too many smaller size checks for larger VC funds. So I definitely agree with Sunwoo about seeking angel investors.
Yeah, I'll also add that there's this balance and difference in how people like to build startups. Some people like to stay very stealth, and I think that works for people who have this ingrained network already. They're second-time founders. They were born into that kind of family or ecosystem. But there is something to be said for building in public when you're really trying to network and looking for those serendipitous moments, because it's much more likely to happen if you're going out, telling people about your company, posting about it, talking about your struggles or talking about your wins, so that other people can more easily find you, because it takes a lot of privilege to be the kind of person who can raise in quiet and just go to their friends.
Totally. Yeah, that's a good point at the end there about privilege. I think that's very important to recognize. And thank you, Sunwoo, for bringing up angels. Yeah, we had not mentioned that yet. And as well for sharing some resources in the chat. I know it can be a little bit harder to, connect with angels or figure out like where are they. But depending on where you're based and your industry, those are some really great resources. So thanks for sharing. And then my next question is a little more for Sam, but everyone feel free to jump in if you have anything to add. But going back to, accelerators, Techstars in particular, and also like incubators and things like that, how do companies and founders know if they're a good fit for applying to a certain accelerator? And what can an accelerator and funding really do for a founder in their business?
Yeah, so I think accelerators are especially important for people who are trying to build their network, because accelerators have this built-in network that will really expand your reach. I think one thing when you're trying to figure out the fit for an accelerator is think about, one, the class size, who you want to be interacting with, if there's an industry focus, especially if you're in a very specific industry that you want to make sure the managing director and the mentors are specific to that industry. The geography, where do you want your network to be best based? And then the people who are running it, what is their past experience? Do you know that they've had success? Do you know if they're going to bring specific learnings for you? So those are some of the considerations when choosing the right accelerator, especially when Techstars has 50 different programs, 50 different managing directors. It really matters to go do the research about what that accelerator's portfolio is, who the people are who are running it. With regards to the funding and the value add, the funding is clear. It's a clear 120K check, 20K part of the 20K part of the accelerator, 100K convertible note. On top of that, the way I think about it is you're giving up a little bit more equity for potentially smaller amounts of money, but with this huge benefit of mentorship. And I almost break it down as it's 6% for Techstars, somewhere between that. A lot of accelerators are somewhere sitting around there. And you're thinking about all the mentors and the network that you're getting that you would otherwise have to give up 1% for advisors. So it's almost like you get this package deal of a lot of advisors for a certain amount of equity. And that's how I kind of think about the value proposition nowadays. But otherwise, you're getting 3 months of programming for a lot of learning, all of this education from managing directors, any sort of network connections that you want. And yeah, I think it's best for people who are really looking to have help with expanding their network and expanding the people who can teach them, especially if you don't come from a tech background, if you don't have VCs in your speed dial.
Awesome. Yeah, thanks for that. And I really like that comparison you added in. So my last question, just to transition back over to VC and give our founders a little more insight into what everyone's expertise is, so that in a few moments when we switch into breakout rooms, you can choose accordingly. But now again, for Fevin and Sunwoo, I was wondering, well, I see we have a, oh, I see you just answered his question. Nice. But going along with that as well, a little more general question, wondering how founders can think about negotiating the best terms for themselves with investors once the firm does indicate interest, and how to really leverage their assets in closing out that deal.
Personally, I think that this is an amazing question, and something that all founders should have at the top of their minds. I think at the early stage, I see too many times where founders are not really taking the contracts that are in favor of them. that can be more founder friendly. And I do think the market is turning away slightly right now to be less founder friendly in an unfortunate way, but I think there still are ways where you can, get the best deal. And that's just to do your own personal research with either portfolio companies that you are looking to, of those VCs that you are trying to get an investment from, to see kind of, what deals that they made investment on. So that's a really good way to see how, each deal looks within a certain VC, and make sure that you're getting, the same deal. Especially if you are a female founder, it might look different for you. So that's definitely something to look into. So that's kind of the biggest piece of advice that I would give.
Yeah, I 100% agree with Sunwoo there. For the past, I believe, 2 years, the markets have been in favor of founders. And unfortunately, valuations are coming down and a lot of VCs are claiming more ownership of companies currently. And it's looking like a lot of predictions are like for the next year and a half or so, that's what it's looking like. But I definitely say communicate and try to reach out to other companies at your similar stage, sort of dealing with or covering the same sort of industry that you are. And that way you can kind of get a sense of what's happening in the market, and to like compare your term sheets to others. Yeah, because right now it's not looking the greatest at the moment, but it's just like any other industry. There are always ups and downs, and hopefully we'll get out of this one soon. But yeah.